G'day, we've got Dale Warburton from the Why Bitcoin show. This is going to be a really in-depth article. We're going to look at Bitcoin, altcoins. Some of us call them shitcoins. Dale, how are you this morning, mate?
Doing very well. How are you going there, Sean?
Really, really well. Before we dive in, I just want to do a real quick bit of housekeeping for everyone. We are at block height 799,115. Local time for both of us is 5:36 a.m., bringing you the juice this early in the morning. We can see Bitcoin, 29,887. It is down 1.4%. It's quite interesting to see it below 30,000. We can dive into that as well. Doesn't matter long-term, short-term. High, last 24 hours, 30,357 with a low of 29,792, which is the lowest it's been in quite a while. So we will dive into that here. Zoom out to the last month. When in doubt, zoom out. You can see we've gone straight up and to the right. So everything is looking healthy. Dale, you've got quite a lot of insights into the altcoin market. But before we dive into that, you've got this incredible Bitcoin show. It's a podcast. I listened to it on Spotify. Which was awesome. Talking to some really big hitters, Peter Dunworth. That was a great interview there as well. How long have you been doing it for, and what's some of the highlights of having that podcast?
Thanks, Sean. Appreciate it. Kind words, man. Yeah, so I've been doing it maybe I think we're about 3 months now, and I have absolutely loved it. It's sort of given me this new lease on life. I was trying to figure out what I was going to do in the Bitcoin space. I always wanted to do something, and I thought about doing a pod for a long time, but I thought, I don't know what I'm going to say. I don't have anything unique to say. So it was with some serious encouragement and somewhat of a dare from a fellow podcaster, Jake Woodhouse, that just sort of kicked me in the ass and said, I wanted an episode live in 30 days, and that's kind of what I did. I suppose all the guests bring something very new and interesting. You've got folks like Peter Dunworth talking about macro. You've got his brother Michael talking about AI and the future. I've got all sorts of folks like the Bitcoin industry body. Everyone brings something really unique. That's the beautiful thing about Bitcoin. There's so many different takes. Everyone has a different view of what I try to do in my show is really get every guest to explain why Bitcoin and not crypto. And everyone has a different way of explaining that. And so I think the goal with the show is really to get that kind of message out. And everyone explains it so differently that it's been quite interesting to see.
Yep. Definitely want a big shout out to Jake Woodhouse as well. What an amazing guy. I was messaging with him this morning, actually. Good on you, Jake, for giving Dale a push and talking to Peter there. That was a real high level conversation. So for yourself, Dale, why Bitcoin and not crypto?
Well, I think as a starting point, let's say that if as Bitcoiners, we generally say that people can do whatever they want with their money. We're freedom maximalists, first and foremost. It's really a case of making sure that they are kind of informed about what the differences are. And then based on that, do whatever you want. It's your own money, right? So I tend to spend more of my energy on explaining why Bitcoin and why not crypto. But the sort of TLDR, and we can sort of double click on this and go a bit deeper if you like, is I just look at Bitcoin as money, and crypto are essentially liquid venture capital private tokens. So in other words, in the old days, if you had a private equity firm if you had a business and you wanted to actually find a liquidity event, you'd invest in, let's say, 10 different companies. Of that, only 1 or 2 would actually make it to the point where you do an IPO or initial public offering, go to the public, and then you could have a successful exit. The beautiful thing that the venture capitalists worked out was with crypto, it was liquid 24/7. It's got mark-to-market pricing, meaning it's tradable 24/7. And so they had short time to liquidity here. And so I like to say the reason why I like Bitcoin rather than crypto is because I'm focused on money. I want something that actually solves the problem of defective money, and crypto is not that. And the other thing is that Bitcoin intrinsically is fair from the outset. There was no pre-mine, and the rules are set in stone, and it's open and accessible for everyone. Crypto, it's not the exact same. It's opaque. It's layered with deception and false marketing and promises of exceptional return. And it's a game for insiders, first and foremost. That's the reality. People got in at a fraction of the cost that the retail investor got in. And they got to do so because they enjoy special privilege and access to these projects to invest in. So it's not to say that's like morally reprehensible. It's just to say it's a different game. And I just think crypto is just unfair. And much like gambling, you win some and you lose more.
Yeah, no, 100%. A couple of things, I guess, before I went and just talked about Bitcoin and the crypto news. Like with all my time on YouTube, I used to talk about a couple of shitcoins there, and you can see them trying to rewrite history. When they're coming out with new marketing and stuff, I think you describe it best as you've seen how the sausage is made. So the marketing side of things, I'd like to dive into that. And it's sort of like smoke and mirrors, or it's an illusion or a bit of fugazi that's going on with every crypto DeFi project. So they say DeFi, and I think this is the thing that's really irked me more and more, and I have less and less patience for it, as they say DeFi, decentralized finance, but it's not. There's some clown at the top that controls everything. They manipulate the price, the project, and then they dump on their own holders. And like you're saying, like the insiders get in as well. So do you want to sort of dive into what you've seen maybe from the marketing side of things for these Web3 crypto projects and how they mislead investors?
Yeah, so I worked at two different shitcoin publications. So I got to see really how the incentives sort of operate. The long and the short is, obviously, if you're not paying for news, you are the product. And so the people that are subsidizing or funding these news outlets are basically not going to have any bad coverage about them. So that's the first thing. So I worked at a crowd where there was a lot of stuff happening at Binance, and I wanted to talk about it, but I wasn't allowed to. So that's kind of at a high level how media, I guess, works. Then you talk about, okay, crypto itself. Well, they have an IP or like an ICO. They'll have initially given themselves an allocation of coins. They'll take those coins to market their product. They use it. They distribute the message of decentralization, and that's in inverted commas, and innovation. I call it decentralization and innovation theater, because it's all, once you dig into it again, there's just no real substance. They push that through the relationships they have with the crypto publications, and then ultimately use those readers as exit liquidity for those tokens. So I guess where I have an issue with crypto is more so the fact that it's not what it actually is. When we talk about something like DeFi, you mentioned that. How do you have decentralized finance built on something that's fundamentally centralized like Ethereum? Again, Ethereum might have some sort of use case. I haven't quite seen it yet in many cases, but the reality is it's not decentralized, because what most people don't understand is blockchain technology actually originates from the 90s and didn't really have any significant purpose at all, because it's a very slow, cumbersome database structure. And I had a great chat on my pod with a guy called JP, and he just outlined the history of blockchain technology. And the reality is that other than for money, there's no real use for blockchain technology. In fact, what you could actually do is use a centralized server far more efficiently. But, to answer your question more directly, if you see an ad on Indeed or careers.com, or whatnot by Tron, I mean, that kind of tells you that there was a PR job for Tron. So, and they have a social media manager. So these crypto organizations, they can call themselves foundations, but you can call a pig a cow and it's still a pig. It doesn't matter what you want to call it. They have a marketing team, they have an executive team who are making decisions, and that's sort of what makes it quite obvious to me that this is not money. It could be something else. It's a company in all probability, but the decentralization thing is really what irked me, because once you understand, okay, Bitcoin was the latest iteration of several attempts to separate the money and the state. All other attempts had failed. And why? Because there was a centralization issue. They could go after one individual or group of individuals. So they needed to find a way, Satoshi found a way in which to create money that could operate on everybody's laptop, if it a $250 laptop. And if you forfeit that, you forfeit the whole purpose of using blockchain in the first place. You may as well use any other centralized system, because that's the exceptional reason why we have Bitcoin. So yeah, I guess that's what I saw. In terms of how the sausage is made, I was working at a Web3 publication and I saw like SBF and FTX happened. And I thought it'd be a great opportunity to really flex and say, this is the time to illustrate how you guys don't know what you're talking about. They didn't know anything about Bitcoin. They didn't know anything about sort of the history and how we got there. And I thought this is an opportunity to talk about things and reposition the brand, to say like, we've got to be more pro Bitcoin, because I'm telling you this stuff, like especially these tokens, are garbage. Ultimately, what came out of it was the lesson from their perspective was actually, do you know what? It's exchange tokens that are the problem. You know, it wasn't just the fact that it was crypto, it's exchange ones. So, you know, FTT was the problem, or in Celsius was Cell, or perhaps you could say BNB with Binance. But the reality is they weren't interested. You wouldn't believe the cognitive dissonance that went through my boss's mind, because she was the PR manager for SBF, literally, and spoke about how sweet and fantastic he was. And I was like, well, he did steal 1 million people's money and gambled it away. He got over his skis. I was like, yeah, probably more than that. So I found, and I say this with respect, they just weren't tethered to reality, these folks. They were very much ideologically opposed to Bitcoin. We were toxic and behind the times. It's a boo Bitcoin. And the saviors, the likes of SBF and CZ, and I said to them before I left, watch, Vitalik's going to be your next boy, but we'll see how it goes.
Yeah. Talking about Vitalik, what he said, I think, is 2 weeks ago when they're talking about, well, they're asking Vitalik how much he staked, and he said very little and below the average of the average Ethereum staker. And then they went on to question, why is that? He said, multi-sig setup is too hard to be able to set up. This Vitalik Buterin, like, he's a genius. There's no doubt about it, but a multi-sig wallet is too hard for Vitalik to set up. That was his excuse. And then there's another lead dev there as well, being asked the same question. And he said, yeah, not as much as you'd think. Again, you know, I'm paraphrasing, but below average. And they said, why? And he said exactly your quote, when you know how the sausage is made, you're pretty hesitant. And it's like, you're like, this is crazy. I saw a tweet the other day and someone said, my whole net worth is in this man's hands, and there's Vitalik walking there. And I have a lot of mad respect for Vitalik. I think he's very great. Like, he created Ethereum. That's no small feat. But I said, you may want to revisit your thesis on that one and use it for the technology. There's some cool things there. And I guess what you were saying earlier is, like, you haven't seen a use case for Ethereum. Definitely stablecoins. That is coming onto Bitcoin as well. So we don't need it. But the way that I'm starting to see Ethereum, all these DeFi projects, is they're like a high-level research and development, like, project for Bitcoin. And eventually it all will move over to Bitcoin, you know, when they can see that it works. It just makes sense in that regard. For blockchain technology, and I don't know if it's like blockchain technology or sharding or something, but decentralized media and applications, I think that's a very important thing. Otherwise, most things, aside from money, probably could be centralized as well. One thing that I want to dive into is, you said you thought the people that you're working with thought Bitcoin was like antiquated, and that everyone was, you know, old school, that was invest in real toxic maximalism.
Yeah.
This Bitcoin maximalism, so what's your idea of like toxic Bitcoin maximalism? And then I've got my take as well. And I think it's great. Like, I think it's everything toxic Bitcoin is probably the best thing that you could do, like, for your life to improve yourself, enjoy life. But what are some of the toxic things Bitcoiners do that maybe Web3 people don't like?
You know, so much of crypto and Web3 is about these faux communities that are just centered around these worthless tokens, whether it's a Pepe token or this NFT project or whatever the case may be. If you think about what sort of from a Bitcoin perspective, toxic maximism ranges on a spectrum from the nicest kind of toxic maxi like Jeff Booth, who again will say to you like, listen, I'm sorry to break it to you, but your token is going to zero. This is going to be hard to hear. And then there's other people screaming, have fun, stay poor. If you don't understand it, I don't have time to explain it to you. That's sort of more or less what Satoshi is like. That's it. And so, you know, there's a full range of views there. Toxic maximism originates, and it's actually it's a term it was actually coined by Vitalik himself as a sort of some sort of sort of jab at the Bitcoiners, but in true Bitcoiner style, they sort of took it on board. And in reality, it's an immune response to a bunch of different things. The one is that during the block size war, and I'm not sure to what extent you or your listeners are familiar with it, but the block size war was a period in history where Bitcoin's future was really uncertain. There were two different factions. One was arguing that we need to change the size of the block so that we can compete with Visa. Others were saying that defeats the whole purpose of this thing. This thing was built, it's supposed to be a boring gray metal that can be transmitted across the internet. That's how Satoshi described it. And we're not wanting to change this. Tons of people and tons of money, like I'm talking about all the heavy hitters, the miners and Coinbase and all those kind of players were really pushing to increase the block size. And it was ultimately the nodes. It's the plebs at home running the node software on their laptops that said, no, we want this Bitcoin. And that's where you got Bitcoin Cash and you got Bitcoin Satoshi Vision. And so the toxicness originates from then because those have the word Bitcoin in. And so they're riding on Bitcoin's coattails from a marketing perspective, but they're very fundamentally different. But in terms of the toxic maximalism, it's really just a case of saying, look, all of these other crypto projects have arisen out of this false belief that Bitcoin is defective in some way, shape, or form. And it's almost as if the subtext in each of these cryptocurrencies is, oh, by the way, Bitcoin's got a problem in this area, but don't worry, we fix it. And so, you know, with Solana, Tron, Ethereum, it's all like transactional speed or it's composability, solving some problem that we didn't know that existed. So, you know, is it effective, Sean? I don't know. Some people respond well to it. I wouldn't want to say the victim because I don't like to be a victim, but I was on the back end of some toxic Bitcoin maximism and it wasn't nice. But I think there's also other ways of doing it other than just screaming and shouting at people and telling them that you're a bunch of idiots. And that's what I try to do in my engagements with crypto people.
Yeah. For me, I find it real difficult depending on how I'm feeling today and what's going on within Web3. Like if a project's wrecked a whole lot of people and scammed, or there's been a rug pull, or the founders withdrawn millions of dollars or something, or they're trying to rewrite history. When I am aware of those situations and I jump up to talk about the crypto news, the Bitcoin news, what's going on in the space, I can find I can become very Bitcoin toxic on those kind of days. If everything else is going well, people are making money with their gambling and stuff, people can do whatever they want. And I want to gently remind them that make money wherever you want to make money. These are startups, invest in it, have fun. There's some great opportunities there, but you only need a small position in there if you are going to go out into the risk curve. And then I find like I'm more forbearing because I made a lot of money in altcoins. So like and that's the point of them. Like it's player versus player. It is gambling. Sometimes you get lucky. I've lost a lot of money in altcoins as well. I've never lost money in Bitcoin. But if everyone's making money, I'm happy if it's fair. But then when you get those days where it's no longer player versus player, but that top-down approach, like that pyramid scheme's come in and someone's taken liquidity or hasn't given investors a fair chance to be able to beat each other at the crypto game, then I become very toxic, I think, and say, guys, you just need to buy Bitcoin, like fuck the rest. It's a waste of time. It's a waste of brain space. Not to say that opportunity isn't still there for people to go out, but it's definitely not sound money, I believe, what you're saying.
Yeah, and I think, I mean, to sort of, from your perspective, if one has made a lot of money on altcoins, it does feel somewhat hypocritical for you to go out there and be screaming and shouting at how don't touch these things with a 10-foot barge pole. Do you know what I mean? It's a bit of a difficult one, whereas most people I know have got burnt, and so they're just pissed. And I say, look, Bitcoin is savings. You know, if you're not going to invest for 4 years, don't bother, because you're not going to have the stomach for the volatility. Yeah. So this is basically money. This is just a way of protecting your purchasing power. These other things, it's venture capital. You know, it's like you're investing in a company that's trying to compete with Tesla or something. You know, it's got like it's very thin liquidity. It's a tiny little thing. It can go up, 200%, but it could also go to zero. You decide. Do you want to dedicate bandwidth to that? I think there's a better use of your time, frankly, because I think that the way the game is set up is that it's rigged. So it's not as if it's a fair game, because what I would like to see, Sean, is actually the way that crypto gets classified as gambling. And the reality of why I'm saying that is that I used to be a lawyer in a past life. And what you want to do is, when you are dealing with public markets, like if you've got like a company that you want to float on a stock exchange, there are tons of disclosures that you actually necessarily have to have, in the sense of who the shareholders are, what is the capital going to be used for, what is your experience, et cetera, et cetera. Like, think about it. You're an investor. You want to know, how's this money going to be used? In the case of crypto, there's no real need for disclosures. So that's why I call it like short-time exit liquidity, because they can get in and out within like a year or two. And the other thing is, they don't have to make disclosures. They can circumvent regulation. It's regulatory arbitrage, because why bother going to public markets and going through the spiel of all the disclosures when, hey, I can just raise 100 mil doing this. There's a clip that's very famous where it's on the All In show with Chamath and David Sachs and a few other people, and they were talking about Solana. And I mean, Solana is the perfect venture capital token that you can actually use as an illustration of why crypto is just utter bullshit. So this thing doesn't actually, firstly, Solana breaks all the time. It's had like 6 or 7 different episodes where the devs have to kind of restart the servers. It's so big and cumbersome, the blockchain, that nobody can actually run it at home. So it's incredibly centralized. So it's essentially inefficient, centralized blockchain technology. Then you've got the reality that Silicon Valley venture capitalists got in at 30 cents. So, and then I think it was in the vicinity, I've posted this on Twitter somewhere, but somewhere between 50 and 70% of Solana was pre-sold to insiders below like 30 cents. So think about what they would have done. What were the incentives there when it hit 260? And then also bear in mind that they also had the ability to go and put all sorts of content through their distribution channels, which are the crypto publications, because they pay the bills. And so that necessarily pumps up the price, and then they could slowly offload. So you end up with a situation where the public gets a tiny fraction of what's available. And when they do get it, they're getting it at a premium. And so that doesn't seem to be equitable. So crypto, if it wants to be fair, from my perspective, they just need to disclose all the facts. And I think if people really knew kind of what was happening, I don't think people would be as excited, because it's once you've seen it, you can't unsee it. It's pretty bad.
Yeah, 100%. That chart that I brought up was the allocation. So 20% to the foundation, 25.6% to the seed sale, and then the founding sale, 20.4%. That's 65% sort of before anything came out, another 20% to the team. And then as public auction sale, 2.6%. That's what the public gets out of all of that, which is absolutely insane. And in saying that, it definitely, like, I still think of all altcoins as shit coins, but I used to be sort of 90% Bitcoin, 10% altcoins. I'd use the profits to go back into Bitcoin. Now I'm 95 and 5 and reducing that more and more. But these are the type of things people need to be aware of. Every single project is a startup with people behind it that are going to dump on people. It just depends, are you willing to sacrifice that mental bandwidth and deal with that mind virus to be able to jump in, watch it, write it up, see what the narrative is, try get out before everyone else. But it's definitely not equitable. It's not fair, like what you're saying. There's nothing fair about it at all. And I believe that's probably the biggest difference between Bitcoin and crypto. Bitcoin, the world's scarcest asset, most equitable asset, the most secure asset in the world as well. And then you've got these altcoins, whatever we want to call them, shitcoins, that are very centralized and there's nothing decentral about them. And frankly, they should. Not all of them, but most of them are securities, but classifying them as gambling would be the go, I think. What do you reckon about the BlackRock ETF? Because that's big news for Bitcoin.
Yeah, absolutely. You know, I think the first thing I always do is like because I'm a Bitcoin, I've got adversarial hat on. So I'm always thinking like, I don't just buy the news and go, woohoo, yeah, this is incredible. Like obviously, initially that is your reaction, but then you think, okay, well, what are some of the sort of downstream consequences that I'm not thinking about? And I think at the offset, I think, firstly, it's fascinating that we've got a situation where us humble plebs have been able to front run the biggest asset manager on earth for the better part of a decade. As soon as 2017, they were calling Bitcoin effectively a proxy for money laundering. And look where we are today. So in short, it's very bullish for Bitcoin. If you care about price action, it's also very bullish. Let's be honest, we all do care about price. In the long run, we care about sound money, but if sound money is not appreciating, then I don't think that we'll get as much adoption. Number go up, technology is powerful. I think what's really going to be fascinating is, I suppose the other thing that I was going to mention too, though, is we have all those ETF applications, and I was covering this while I was in the news, working in the news there, and they kept on getting kicked to touch. And the real concern there was that you had external, offshore, unregulated exchanges, a la FTX, if we must be honest, that could manipulate the price of Bitcoin. And I think we did see that happen in November 21, which was like a completely false new all-time high that was kind of manipulated through some of the actions by SBF and his friends at Alameda Trading. So I don't think the underlying issues for the rejection itself have been properly dissolved or resolved, rather. It's too early for me to think. But what is very telling is that BlackRock's coming in, and BlackRock has a track record of something like 575 and 1 in terms of ETF applications. So does that mean that they're guaranteed it to get through? Not sure, but the prospects are looking good. Plus, effectively, the way I look at BlackRock, because I'm a Bitcoiner, is that it's an extension of the federal government. Essentially, there's no chance in hell Larry Fink, who's the CEO, wouldn't have picked up the phone to Gary Gensler, who's eventually going to move into Treasury, because they're all part of this revolving door, and say, hey, boy, what's happening with this? What do I need to do to make sure this one gets through? And they would not want to embarrass themselves. So that's how I've thought about it, because they got an ego, especially Larry. So I would imagine it's going to get approved. I think it'd probably get kicked to touch initially. It won't happen this year. We could probably look sometime mid next year. But this is now me as someone who was a lawyer, just looking from the outside. But I'm not as close to it as, say, Haley, who recently spoke with. Yeah, but bullish overall, man. This can't be a bad thing, eh?
I definitely don't think it's a bad thing overall, like you're saying. I guess the quote that I say most in reference to it is, it'll never be as bad as what we think it is. However, it'll never be as good as we think it is either. And what I mean by that is it's not self-custody Bitcoin. it's like you're no longer the bearer recipient of your Bitcoin shares. You're not holding on to the actual asset yourself. But what's happening is Larry Fink, and this is what I said yesterday, is he's our chief marketing officer now. Like, he is advertising Bitcoin to the world. They're going to get a commission. They're going to make a lot of money from it, which is great. It'll put more eyes on Bitcoin. And the toxic Bitcoin, quote unquote, maximalists are going to get louder and louder and louder. But when people are searching on YouTube or Google or Spotify and they start listening to what is Bitcoin, inevitably they're going to come across one of these quote unquote toxic Bitcoin maximalists. And it's going to sink in eventually that they should self-custody. And there's a little bit more going on here. So I think will work out really well, because the Bitcoin community is so strong-willed in their thoughts, their thinking. They'd be like, all right, you've bought a BlackRock Bitcoin ETF. Fantastic. Next thing you need to do is absolutely sell it, learn how to take self-custody, put it into cold storage, and then you're set for life. I think that narrative's going to get louder and louder, and BlackRock's going to do us a favor by bringing their attention back in. But then, people that are interested to do their own research will eventually come across someone like yourself or myself or Peter or whoever it is within the Bitcoin space, and they're going to realize, okay, there's a little bit more going on here. Or they'll come across Safety Namusa's book and they'll realize, okay, cool, I'm aware of it. Now I need to learn a whole lot more, and then that'll probably start orange pilling people pretty hard, I think.
You're right, exactly. And so, this is where a measured maximalist would take that sort of approach to say, like, get exposure however you are comfortable with. With me, and I mean, this is not blowing my own horn, but I did not buy Bitcoin for about 3 days because I knew that this game is all about self-custody. So my first thing was figure out how to actually take this thing off of an exchange and into my own self-custody, figure out what all these 12 words thing is and how it actually works, and don't screw it up. That was kind of my fear. And so it's like, let's do that. And so I didn't buy before that. Now, there are kind of, in principle, you should be able to, with an ETF, be able to redeem in specie, meaning you can redeem for that sort of quantity of whatever the underlying asset that it's tracking. So in gold, you should, in principle, with the gold ETF, go and get your gold if you want it. Now, not all Bitcoin ETFs are going to necessarily have that, because they have different structures. I recently spoke with Jeff Yu from Monochrome Asset Management here in Brisbane, Australia's first institutional Bitcoin investment manager. And they have got a Bitcoin unit trust, which allows you to do that effectively. They will be your custodian, but if you say, hey, man, listen, give me my Bitcoin, they'll send it to your address, wherever that is. Now, they're actually, as of a few days ago, actually, they've been provisionally, they're somewhere along the line. I don't know what the regulatory process is, but they're closer towards getting Australia a Bitcoin ETF on the ASX, not on the secondary exchange, which was it's a little bit of fake news. I don't want to say fake news. There are a couple Bitcoin ETFs that popped up over the last few years in Australia on a secondary exchange, very low liquidity. And it was actually like a fund of funds. So they're not actually getting exposure to Bitcoin. You can go and redeem the Bitcoin in species and actually like say, hey, I want my actual Bitcoin. But yeah, I mean, first principles, Sean, not your keys, not your coins, this is the whole reason why the space exists. This is the whole point. If you don't trust yourself, figure out a solution that can work for you. So in other words, perhaps you don't want your net worth tied up on a single sig address. That's okay. I agree. I don't want that. So figure out what's out there. There's Unchained Capital. There's Casa. You can work with the likes of the Bitcoin Advisor, like with Peter Dunn, with Jake. Collaborative, collaborative custody. There's a bunch of different kind of ways that you can manage this, but the worst case is starting it, leave it on an exchange. That's the dumbest. Okay. Then after that, get it into a wallet, like whatever wallet. Okay. That's at least in your own hands for the most part. Then you want to get it into some sort of cold wallet. So Ledger, Trezor. I don't recommend those. I say a cold card. They do Bitcoin only. So if you've got shitcoins, you're on your own. And then from there, you start saying, let's do a multi-sig. off below that's Casa. Casa, I don't really like Casa that much anymore because I think they've lost focus. They're also providing Ethereum. They've provided Ethereum functionality, and I'm like,
sounds a little bit toxic, bro.
I'm toxic, bro. I told you. So I'm going like, listen, you might have a good product, but I want you to keep your eye on the ball, dude. And I want to make sure this is my net worth and it's tied up in this thing. And if you're trying to now, if you've got to now have teams that are dedicated supporting Ethereum and Bitcoin, yeah, I'm not on your side. So then the cold card is the next or not the cold card rather. So then Unchained Capital is the next bet. Okay. And that is, it's effectively free. And so, I mean, if you can onboard yourself. So these are the things, not your keys, not your coins, but it's just so ironic how, these fund managers who were kicking and screaming have now just in a way capitulated because they realize that Bitcoin is uncensorable, unstoppable. There's nothing they can do. And it's coming from the ground up. It's not as if Larry Fink goes, oh yeah, this could be digital gold. It's coming from all the investors that are going, we want exposure. And so he recognizes that. And so it's come from, its demand it originates from their customers more so than anything else. And and they can't do anything. I mean, there's nothing they can do. And I'll add one thing there, Sean, sorry, just to continue on. What is even more bullish to me is the fact that sort of something in the vicinity of like 30 to 40% of Bitcoin hasn't moved in 5 years. You've also got a situation where we are seeing the lowest supply on exchanges globally in something like 5 years too. So the signal there is to say that people who are putting their crypto or Bitcoin on exchanges are typically doing so in anticipation of selling. Those who rip it off are saying, look, we're sticking this into cold storage, whatever you're doing. And we're seeing very low levels of availability of Bitcoin on these exchanges. So can you imagine what happens when the day finally arrives and Bitcoin, BlackRock wants to go buy a shitload of Bitcoin? Like, what's that going to do? It's going to squeeze the price big time. So bullish AF, that's what I can say.
Yeah. I guess when I was in crypto all the time, people would be like, bullish AF, when Lambo, when Moon, they'd say all these things. But when you really concentrate on Bitcoin, like I say bullish AF, but I feel it a lot deeper because it is more exciting. Like with BlackRock, it's absolutely massive what's going on. In regards to cold storage with crypto, and you said, like Bitcoin only, the cold card, whatever it is people want to use, you wouldn't recommend Ledger. The way that I see it is with crypto, just because I have a crypto audience as well as Bitcoin, you want to have really quick access to your altcoins. Bitcoin cold card or something, you don't need to be able to grab it, sell it in a rush. You can make it really difficult, spend your time doing it. Something like a Ledger or even a MetaMask with crypto, because you just want to be able to hit buy at the opportune time. So I think that's probably the best way to be able to think about it.
That's a reasonable assessment, Sean. I mean, the idea is if you're trading the stuff, there's no point in sticking it it's like almost like burying your gold underground, and then you want to quickly rip it up next Tuesday because you want to sell it. Like, that's a great sort of way of thinking about it. If you've got your alts and using it to trade, then you may as well just use MetaMask. As long as your exposure is not too big. I mean, if your whole net worth is in MetaMask, I'd say, listen, do a little bit more digging and perhaps do a bit of risk management.
Yeah, I guess that's why my message is 5% into altcoins, because if you put, say, $100 on something and then you get 100x or a 500x or something, that's going to work out really well. Is that going to happen? More than likely not. But if you want to go out 5% and MetaMask, you just need whatever it is, wherever you put it, just be willing to lose all of it. But the reason why I say keep it hot or keep it like quick draw like a pistol is because if you find out that the founder is stealing funds or whatever, that price is just going to tank hard. Bad news comes out, the SEC comes out. You need to be able to just go in hard, sell straight away, be able to cut your loss as quick as possible. Let's wrap it up on Operation Choke Point 2.0, because you were in the publication side of things. You probably would have seen it more for crypto. It's definitely not aimed at Bitcoin. It is a crypto thing. What are your thoughts on it? Real, made up?
Well, okay, so I think it's real. I think in the sense that originally the goal was to try and cut off undesirable industries at the knees by cutting their banking access. So whether it was prostitution or weed or these sort of things. And that started with the Obama administration. And we now have got the second iteration that seems to impact the entire so-called crypto industry, Bitcoin and crypto companies. I think I've been saying this for a while. Again, this is my Bitcoin adversarial hat on, which has so far served me well. Generally, I think the centralized powers are not a fan of those technologies that they can't control. I say Bitcoin's the only one because I think the others have been and will continue to be co-opted. I mean, the Ethereum is co-opted by the World Economic Forum. So if you're anti-establishment, that's unfortunate. But what I think is going to happen, they're going to start putting limitations in terms of what you can actually buy. So what I've been saying to people is the gates are closing. I think what we're seeing, Commonwealth Bank here in Australia, as well as NAB. I literally got a message this morning from a friend of mine saying, oh yeah, I got this message from my bank, and I think it was NAB. I just need to have a look, and saying we're blocking certain exchanges for your safety. It's always for your safety, but there's something more going on.
Yeah, just a big shout out, Commonwealth. You absolutely suck. I've had major problems. Don't bank with Commonwealth. They're crap.
Absolutely. No, and the thing that I'm quite fortunate about is that I'm glad I'm in my Bitcoin position. My Bitcoin's in cold storage, and I'm chilled. There are going to be tons of people who want to get in, and I think they're going to find there's going to be limitations. So initially, they're just trying to cut off at the knees through the banking sector. We'll put limitations on it. We'll make it really hard. But it goes even further than that, Sean, because once CBDCs come in, and they will happen, I mean, it's not a question of if, it's when. There's more than like 106 countries that are at various stages of the CBDC projects.
Yeah.
You're gonna have programmable money, and guess what that's built on, by the way, if you care about freedom, Ethereum. But anyway, side note. And so and so what they're going to say is, oh, Sean, by the way, you spent too much on beef, and by the way, you spent too much on Bitcoin. You can't do that anymore. So you're only allowed to buy $500 worth of Bitcoin this month, Sean. You might be able to use your partner's allocation, but that's you for the month. So I think that it's real and it's happening.
Well, we've seen that already with Commonwealth.
Yeah, exactly. Yeah. And it's I don't see it getting any better. I think what I do take comfort in the fact is that Bitcoin's unstoppable. So if you can't buy it directly through an exchange, a centralized exchange, I'm not sure if you're familiar with BISC and RoboSats and these sort of things. I think decentralized exchanges will win in the end. I think that's where a lot of these exchanges are going to have to migrate, because once you've had your sort of bank ID sort of flagged by the Commonwealth Bank or whoever, you're going to be sort of pissing against the wind, as I say, man. And it's crazy to think that these banks are actually taking a view that, oh, by the way, we know what's best for you, and you can literally phone them and say, hey, I explicitly want to buy $50,000 worth of Bitcoin, and I want that in my account. Like, send it right now, and they'll go, no, we know better. Yeah. But by the way, buy cigarettes, go gambling, do all these other stupid things for your health, but we're protecting you. It's for your safety, man. So it's very real, Sean. And I mean, I can't comment too much on the US, but I think decentralization for the win. So these exchanges are necessarily, I think, over time going to have to find ways to decentralize. And then at the moment, the UX is really crap. I've played around with BISC, and it's like no one who's not committed is going to spend the time necessary to get through that. It's a pain in the ass. So once they've got that UX nice and slick, and it looks and feels like every other exchange, there's nothing that can actually be done. Then it's peer-to-peer, uncensorable, but it's real. I don't know. What's been your take on that whole thing?
Yeah, definitely. Like Commonwealth Bank, I think 2 weeks ago, they blocked my funds for 30 hours to go to an exchange, which I've been using for years, a centralized exchange. Had to call the bank to be able to get my own money. And I believe now they've limited it to $10,000 per month that you can put in, or something like that. So I'll definitely be leaving Commonwealth Bank. And I think what I see happening going forward is the banks are going to start offering Bitcoin. Like I just see that as the natural progression. It may be once the CBDCs are there, but they'll kick out everybody, and then you'll be able to just go to your bank and buy it. Even here at the post office, you can already buy Bitcoin. So I do see that as a natural progression as well. Traditional finance just wants control. If you're buying Bitcoin with CBDCs, they know what Bitcoin you've bought. Everything's very transparent. So I don't see them ever having a problem or cutting off Bitcoin. It's just the rest of crypto. It's definitely happening big time. So
yeah, you're right with that, man. The banks are all going to be about it. So in the future, you're going to have, you're going to have your sort of cash. You're going to have your savings. You might have your checking accounts, and then you're going to have your Bitcoin accounts. And they're going to be very careful about which cryptos they're going to want to support, because they're going to, they're going to be pretty fussy. And so I think it'll be Bitcoin. But again, not your keys, not your coins. So to my mind, in some ways that's better than nothing. But yeah, no. So get through the doors while you can. That's all I have to say.
Yeah. Ladies and gentlemen, Dale, thank you so much for coming on. I think the biggest takeaway, learn as much as you can about Bitcoin. If you're dedicated to investing in crypto, just look at your risk mitigation strategies. Have a lot of fun with it. Just don't go too far or risk more than you can afford to lose, because most likely you are going to get wrecked there. Have fun though, enjoy the opportunities, but remember, Bitcoin's sound money. Bitcoin is not crypto. Dale, thank you so much. I have put your podcast and your Twitter below. Do you have a final message for everybody watching?
Yeah, absolutely. We're living through one of the most fascinating periods in financial history. This decade is going to be rife, full of all sorts of challenges, and the best you can do is stay solvent. So don't leverage up, especially during the bull market. Don't get silly. I'd say, dollar cost average into Bitcoin long term, stick it into cold storage, and your future self will thank you in a couple of decades time. The future is inherently uncertain, but I have tons of confidence in Bitcoin. So but thank you very much for the opportunity to chat on your show. If anyone wants to learn a little bit about why I'm a psychopath and a Bitcoin psychopath and a toxic maximalism, they can hop onto the Why Bitcoin show. I'm on Twitter and all the other podcast platforms. But it's been really awesome chatting to you at this. It's a great way to start the day, Sean. And appreciate the opportunity, man.
No, such a pleasure. Everyone, Dale's links are below. Check them out straight under the description. Thanks so much, mate. We're going to have to do it again, hey?
Yes, 100%. Cheers, bro. Appreciate it, man.